Hey, what's going on, everybody? It is Aaron Trevino here, and we have two wonderful guests from Houston, Texas. We have Cody and John. How are y'all doing?
Fantastic. Thanks for having us today.
Yeah, absolutely. It's an early morning, and it's always good to kick off the weekend like this, huh?
Absolutely. Absolutely. Nothing wrong with a good networking early in the morning to get your day started. So,
Yes, sir. That's right. So, for those of us who aren't too familiar, we introduce yourselves.
go ahead, John. well, I'm Cody Laughlin, a managing partner here at Blue Up Capital, along with John. And by day, I am a healthcare provider. I'm a registered nurse. Been doing that for about 13 years. But I've been a real estate investor for 10. Most of that being in the single family space. Made my transition to the multifamily space about 2 years ago, and definitely saw that as my path to financial wealth and financial freedom. And so been pursuing that for some time now, along with John and our partner, Brian. Our focus is multifamily acquisitions here in the primary and secondary markets of Texas, East Tennessee, and Kansas City. And that's my story, John.
Cool. Hey, I'm an energy trader here in Houston. A lot of exposure in the financial markets. I've been investing in real estate since 2015. I have a reasonably large passive portfolio of around 2,000 units across the United States. Cody and I hooked up last year to go start being active, here in Houston and Tennessee. And that's we hooked up, we formed a relationship, started trusting each other, started actually going and doing things and underwriting and forming relationships, finding investors, et cetera, et cetera. And so here we are, and we're looking forward to a happy 2021.
Yeah, absolutely. I'm just curious as well. Are you both originally from the Houston area, or what brought you to Houston?
Well, I'm actually from Southwest Louisiana, born and grew up there, and moved here to Houston to pursue a career in healthcare. In Louisiana, there wasn't a lot of opportunities as far as the medical field goes. And so I graduated in 2008 and saw Houston being the closest major MSA to where I grew up from, with the opportunities. And, Texas Medical Center is here in Houston, largest medical center in the world. So definitely saw that as an opportunity to grow the corporate ladder and really take advantage of some opportunities. And we could talk about this a little bit later, but when I got my exposure to real estate in 2010, of course, that career trajectory changed. But that's how I ended up migrating here to Houston about 13 years ago. So
I'm from Nashville, Tennessee, lovely place, but moved here. Been focused on energy for almost all my career. And so Houston is the center for energy in the U.S. So here we go.
That's right.
John, you left out the cool part about the pig farm, man. You got to tell them about the pig farm.
Yeah, I grew up on a pig farm in Tennessee. It's still operating. It's a big family operation. It's been in our family for over 200 years. And we are famous for Wilbur the pig.
There you go.
Wilbur the pig. What
Wilbur
about
the pig in the movie Charlotte's Web that was recast in 2006? That's our pig.
Wow. That's incredible.
Fun fact.
You just made elementary school Aaron really happy.
Yeah, actually, when I was a kid, we would always bring pigs into like the elementary classes and kindergarten, and it was, looking back on it, it was just an absolute blast.
Wow, how about that? That's pretty neat, John.
Mm-hmm.
I'm just curious as well. It kind of seems like you guys are coming from the different worlds of energy, healthcare. The pig farm. What was there any particular moment that got you into real estate?
Well, for me personally, my introduction to real estate came by way of being an accidental landlord. Again, I mentioned to you, we moved here in 2008. My wife and I were fresh out of college. We bought our very first house. But in 2008, that was in the very heart of the Great Recession. The housing market was in the dirt. People were losing jobs left and right. I mean, everybody recalls, just going through that moment of time. And when in 2010, we decided to move to a different part of Houston, we tried selling our house and we could not. Again, the real estate market was just in shambles. And we were panicking because we had just bought a second house to move into, but we had this house that we couldn't afford to pay 2 mortgages on. So we ended up having to put a landlord in there, a tenant in there. And we just kind of wing it, just going with it. But, being in the professional career at the time, I was watching people around me who had been working for decades, 30, 40 years, getting near that retirement age, who had their retirement assets just decimated over the past couple of years. And it just didn't make sense to me. So, started studying. I wanted to learn how to invest in retirement accounts, how to invest in stocks, how to build your wealth to avoid that circumstance. And along the way, somebody introduced me to what I like to jokingly recall the Purple Bible, the Rich Dad, Poor Dad. And, it was perfect timing. And it just completely altered my entire perception about what real wealth is and how do you build it. And yeah, man, from there, it's just, the light bulb went off, and, the real estate entrepreneur bug hit me, and I just been trying to pursue that journey ever since. And yeah.
Yeah, for me, I mean, it was just really a step into diversification. I guess I've grown up around farmland and real estate since I was a kid. And the area we grew up in has had tremendous development. And honestly, I think I was blind to it because I thought that was just normal. And then looking back on it, I was like, holy smokes, this area has developed from the country to a major suburban area of Nashville. And it happened over, 10 years. And so that really besides the obvious diversification of real estate, just the potential for it and how it improves areas. And you're serving the need for that population that's coming into that place. And anyways, that's kind of how it kind of kicked off for me. But to be honest, if I would have opened my eyes earlier, I would have been like, wow, I didn't know how powerful this was. But here we are. So 5 years later, we're in the game.
That's right. Yeah, we're in the game now. It's it's great to hear your story about it. I'm just curious as well. Specifically, Cody, you touched on something interesting, was about real wealth, and it kind of seemed like reading that financial Bible, Rich Dad Poor Dad, it maybe knocked down a few misconceptions to you. So what would you say real wealth is?
Well, real wealth is being able to shield your risk from things that you can't control. And what I mean by that, and this is not to make a biased comparison between real estate and the stock markets, but if you look at what's happening in the stock market over the past 18, 24 months, and this is John's life every day, so he could speak to this, but you have this volatile behaviors and patterns throughout, right? If you look at it on a chart, you see this just needle going up and down, up and down, up and down. And those swings can occur from any and every facet that's outside of your control, whether it be government policy, foreign trade wars, president makes a tweet that nobody likes, and all of a sudden,
or a Reddit forum,
or Reddit and Robinhood go crazy, stuff like that. So, when I worked when I saw this evolve in 2008, and people that have been doing what they were told to do, they come to work for 30, 40 years, they show up, they put in the time, they built this retirement account, they tucked money away, and then, within a matter of just a short 12, 24 months, gone, and for me, I was like, well, man, that doesn't make sense. That's not real wealth, because if it's at the drop of a hat, essentially at any time, your retirement assets can be wiped out. There's no security in that, right? So it took me some time, again, to study and learn and understand the power of real estate. But for me, real wealth was being able to build and invest in a tangible asset portfolio that would produce cash flow, that no matter what happens to me, no matter what happens to my W-2, I will have income that's coming in to help carry out through my lifestyle. And so that's that's why I'm so biased towards real estate. That's why I love investing in tangible assets. And it's a long-term game as well. And so that's my belief. But
Yeah, this is a cash flow game. And that's kind of what real wealth is. So to me, I mean, it's just, is there cash coming in the door no matter what I do, whether it's real estate or outside of that? Is there cash coming in the door without me having to, push a lot of buttons, if you will? And once you get to a high enough level where that kind of sustains your expenses, I mean, you've got freedom to, I mean, why do you live where you live? You live where you live because you work there. And that's what sustains your life. What if you had enough income to satisfy your expenses and you could live anywhere, closer to your family, away from your family? And then the possibilities are endless, but that's true wealth in my bookend. And obviously real estate's a big cash flow game. And it's nice. And Cody mentioned the stock market, and it's a testament to, I watch it every day, and I'm an active trader, and it's extremely volatile. It'll make you old. And it's a job, to be honest. If you're like an active investor, it's a job. And eventually, and that's fine for a young man or a young woman, but eventually when you get older, you're like, hey, I need to cut this thing out. I've got grandkids to raise and other priorities in life I need to attend to versus babysitting my assets that produce income. I need to sit back and put it on a passive, kind of the passive income. And I show my kids this. Listen, this is really important. Not to get off on this tangent, but I still get a check for $2.56 every quarter from National Healthcare Corporation, and they mail it to me. The postage is almost more than the almost more than the check. But I show my son. I'm like, listen, I was like, this is a check, and I didn't do anything for this check. My grandma I've got 3 shares of NHC Corporation, and they pay a dividend, and they have forever. And I still get this check, and this is mailbox money, and we didn't do anything for it. It's just, it shows up, we deposit it. And that's a really important concept to kind of instill in your kids that, hey, this is a thing. This is real cash that you can spend it on things, and you didn't do anything for it. You just invested in something a long time ago. And company dividends are a paltry yield versus what you can get in real estate right now, and hence the attraction of real estate to most of the investor class. And it's real. I mean, the checks come in almost every month, pending eviction moratoriums.
Yeah, no, absolutely. That was a terrific explanation, and a great thing, I'm sure, to instill in your kids as well.
Yeah, I think, to John's point, I think we have a responsibility to share this with our children, with our youth, with people around us, because surprisingly, financial literacy is not prevalent across our society, and the old way of doing things. I'm mid-30s now, and the old school way of our grandparents when they grew up, of, hey, you just go work hard, you save your money, and you hold it there, and you'll be okay. It doesn't work in this age anymore. It's if your money is just sitting there stagnant, you're going to lose out. And so your money has to constantly be moving and being invested in what we talked about earlier, cash flow producing assets, if you're really going to build that true financial wealth. And so as a father, learning that at a very early age, as John mentioned, I think it's important that we share that message with our kids, because it's just not taught in school, and it never will be. The system is designed specifically that way, to continue to separate, the wealthy from, the not so much. And
we've got negative real yields. Okay. I want everybody to understand this. Inflation is definitely outpacing what your, traditional bonds or whatever you can get, the rate on that. It's outpacing it. And according to Shadow Stats for 2020, the actual CPI number, the government CPI number, I don't actually trust. But the shadow stat is 8.9% cost of living increase in 2020. 8.9%. Okay, so think about that. We're like, okay, how, if I'm just making 8.9%, I'm holding even. I'm holding my purchasing power even, and that's why there's an interest in real estate, and that's why stocks are bid up to kingdom come, because it's an alternate asset to the dollar. When you're spending, we are spending. It's the easiest political solution. Like, well, we'll just kind of raise taxes and print more money and it'll kind of solve problems, but it doesn't hold people accountable. But it's the easy button. And you kind of debase your currency and debase your purchasing power. If you look at purchasing power since 1970 to now, huge difference. Huge difference. Your parents could work. There could be one parent working in 1970 and basically support the house note and a car and all that stuff. That's actually not necessarily even possible in today's world in the U.S. So again, that's why people that want to stay ahead of that inflation, those real yields, they can't get anywhere else. They're flooding into various asset classes. And Exhibit A is the stock market. We're all-time highs and we're going higher, guaranteed. But we also have a strong interest in real estate because that's real cash flow. Now the stock market gets bid up and you're elevating these, price to earnings ratios. So, Apple's trading at, I don't know, God knows what it is now, 40-1 or 40 price to earnings ratio, that's very expensive for a company. All these valuations are expensive, but no one has an alternative right now. What is a little bit more anchored in sanity is real estate. It can't command those extreme premiums that gets bid up in the market. And it's a lot of a cash flow game. So, hey, can I get 7% cash on cash every year if I invest $100,000? That means I get $7,000 a year. Oh, that's pretty good. Oh, and there's some upside on the sell at the end of year 5. Oh, that's really nice. Like, that's very logical. It makes sense. People need a place to live. And bada bing, there you go. That's why people are interested in real estate and to kind of protect themselves and protect their families from the erosion of purchasing power. Whew, sorry.
Yeah, no, absolutely. It's interesting, really anyone is in the real estate business, right? We all need a place to live. Obviously those financial incentives, those tax incentives are there. I'm also curious as well, you're also, whether you're in healthcare, energy, you're using a lot of those, I guess a lot of that mindset, to be successful in real estate. Could you kind of explain, maybe your first single family deal or kind of your first touch of real estate?
Yeah, again, I'll go back to my story in 2010 when we had to put a tenant in there, our first house. We were the landlords. We were doing the hands-on management of that property, and it was great at the beginning because I was like, hey, this is a guy that's living in my house, paying my mortgage, and even I was making like no cash flow off this, but it was just the fact that somebody's paying down my mortgage. And I knew, all I knew was if I held it long enough, equity would continue to build, whether I made cash flow or not. I'm like, oh, this is pretty cool. So what I discovered very quickly though is I hated being a landlord. Chasing the tenant down, dealing with the late phone calls, getting the tenant out and discovering the mess that they could leave behind. It was just a mess. And then I put a second tenant in there about a year and a half later. And we had to go through the eviction process with that. And that was a miserable process. And I had waited way too long because I'm a nice guy. And, these tenants, man, a lot of them, they know the stories, right? They know how to get you. And especially if you show any vulnerability. And they got me. So anyway, long story short, realized very quickly that, property management was just not something that I wanted to do. So I hired a property management just on that one single family home, and that peace of mind was great. And I actually held that single family home till earlier in or midway through 2020. So I just liquidated it about right at the end of summer 2020. And the power of that was realizing that we benefited from tax depreciation every year while we had the home. We had a very nice equity gain at the end of it because we held it for 10 years. The housing market has been appreciating, especially over the past, 12 months. And so my equity position definitely improved and was great. So point being is, that was my first exposure of the power of real estate and how you could really leverage this. And like we talked about, build that wealth. And so the goal was to continue to do that. Right. And And I was like, man, I'm gonna go buy 100 single family homes. I'm gonna go, I'm gonna have this massive portfolio. And then in 2011, John, this goes back to your point earlier about getting started a little late. I got introduced to multifamily in 2011, and I was like, ooh, that makes sense. You mean 100 units under one roof versus, all over a city? That makes sense. And so, but unfortunately, I was a little less focused, a little less disciplined, if you will, kind of chase some shiny objects along the way, but got back committed to real estate. But the point of all that was, that it just, I saw the power in it. And so I did a couple single family flips as well. We could talk about that later, learn some expensive lessons that way, but didn't really see that being a scalable model. But, when you have real estate, if you can just buy it and hold it, and like I said, benefit from the tax depreciation, the cash flow, the equity gain, it's a really, really powerful tool. So that was my introduction to real estate. When I first started, I was like, oh man, this is going to be a disaster. But, I'm so fortunate to have that experience and been thrown into it. And it's definitely helped us today. So,
what's nice about real estate? Its price doesn't change every day. It's hard to sell. It's hard to buy.
Mm-hmm.
I'll just give a quick lesson. I mean, a lot of people since in the past 12 months have started like effectively day trading, not really knowing what they're doing. And like they can get shaken out of position on any like hat drop, like something spooks them and they're like, oh, I need to get out right now. And then of course they sold the bottom or bought the top. Real estate is psychologically geared for the long term. You're committed to it. You're like, okay, I like this property. I like where it's at. I think I can do some value add and increase income like this. And it's basically treated like a business. And by the way, I can't flip it out tomorrow. I'm not going to buy it today and sell it tomorrow. It's not a stock. And so it permanently has a kind of a longer term game built into it, which honestly is beneficial for most investors. Most investors are poor traders because they're always doing the opposite of what they should.
Yeah, absolutely. It definitely seems like more of a long-term solution, especially if you're looking to build a portfolio.
Yep. And you don't see it change the value every day, right? So there's no ticker on, 123 Main Street. It's just like, oh, we'll sell it eventually. We think the value's rising, but it's 5 years from now, and it keeps you true to your psychology.
Sure, absolutely, John. I'm just curious as well. Y'all mentioned something earlier about tax depreciation. For those of us who don't know, could you explain what that is and why it's important?
Yeah, I mean, essentially, to keep it kind of as simple as, the government rewards us as owning investment real estate with paper losses that we can benefit from holding
it's deferral of taxes, basically.
It's a deferral of taxes, but basically paper losses on paper that allow us to deduct that taxable income that we would make off that investment property. So, and it's taxed at one of the lowest tax brackets as compared to, ordinary income as a W-2 employee or other type of investment vehicle. So,
I mean, yeah, people use real estate as a tax shield in a lot of different manners, especially high net worth individuals. They'll because they want to defer their gains, right, or defer their taxes. And so especially for some people that qualify, especially as real estate professionals, they can effectively shield all their W-2 income up to, their income against for year one. Now, obviously, you have depreciation recapture in the later blah blah blah. And there's, talk to a CPA. But long story short, you're not avoiding taxes, but you're deferring them. And if you're really playing the long game, you want to die and own the real estate, and then your heirs get the stepped up basis. That's the true. You have to die to beat the tax man on that one. But yeah, it's defer, and then die, get a stepped up basis for your heirs. That's really how generational wealth passes.
Yeah, I heard this many years ago, and I forget who said it, but it made complete sense when I was learning. Is, you know, the government doesn't want to be involved in housing, and they are in some way right now, but in general, they don't want to be in housing because they suck at it, right? They don't want to. And I mean, come on, think about all the people that are on, you know, different various programs for housing and whatnot. I mean, you know, it's a mess. It's a shambles. So the government doesn't want to be in houses. So they reward entrepreneurs like ourselves who want to provide homes, affordable housing to people that need those homes. And they provide us those tax advantages for that reason. And guess what? Many of the people that are making these laws, they're invested in real estate as well. So, you know.
Yeah, that's the key thing. I mean, people don't understand how much wealth is in real estate. I mean, I forgot what the figure is on how much the total value of U.S. real estate is. It's in the trillions of dollars. But most of the lawmakers have a reasonable amount of either land or property and buildings on their balance sheet. Because again, the U.S. incentivizes that. And if there's a day where all those incentives stop, you know, investment's going to drop and values will drop, and, you know, we've got to be prepared for that. But that hasn't been the case for a long time. So if we still want to build out the U.S., provide safe, affordable housing and solid, you know, commercial infrastructure projects, that it will probably continue to be rewarded.
Mm-hmm. Yeah, absolutely. And I'm curious as well in terms of the markets that you're serving in. You mentioned them at the beginning of the show, but, you know, could you kind of explain the markets that you're in and maybe particular property types, asset classes that you're looking for?
Yeah, so I'll do it simply. This is an old song. It's a T for Texas and a T for Tennessee. Those are both Sun Belt states. They have no income tax, and there's high net migration into both those places. And I think they're great places to live personally. So that's kind of the broad investment criteria. We think they're attractive places. They're warm. There's no snow or little snow, and they have no income tax. That's right. So there's not a lot of barriers on the, you know, once you get there, there's a lot of extras to pay for. And then specifically multifamily, which has been a hot asset class, which is very competitive right now. Also open to other avenues, but it's got to be commercial and you know, it's like self-storage, things like this. But effectively, our main focus is safe, affordable housing and to no to low income tax states.
Sure.
Ballparks. There you go.
No, I'm curious as well, you know, because I know that with, you know, at least with residential properties, you have cash flow. So maybe for someone who's not familiar with maybe the difference between a residential property and, say, self-storage, can you cash flow a self-storage property, or what are you more looking at?
Yeah, so self-storage is a really interesting market because, first of all, it's cheap to build, right? It's a bunch of steel and concrete. That's it. There's no interior. I'm not painting anything. What's interesting about that, because it's cheap to build, it's cheap to overbuild. It's easy to overbuild an area. So you want self-storage in an area that's not overbuilt or has the capacity to be overbuilt, i.e. a lot of vacant land. So if you can find a spot that's like the last spot, there's no extra, you know, place to build, even close to an apartment complex. What's nice about self-storage is the rents are like, let's just call it 120 a square foot or 120 a month. It's not $1,200 a month like maybe somebody's rent. So it's easy to like get a 3% increase in rent, because it's actually not a whole lot. You know, like, oh, $6, not a problem. You know, you can push rents because it's a little stickier. And then also what happens is people actually forget about their storage. So they put all their stuff in there. We like stuff as Americans, and then they don't touch it for like 3 years and, until they move somewhere. And especially in areas that have high net migration, people are moving in and around the area. So net, you're going to have people looking for storage to place things. So yeah, definitely a high cash flow game. It's just easy to build. So you just got to make sure it makes sense. And then on multifamily, again, all these things are driven on net operating income. So ballpark, whatever rents you receive, about 50% of that you're going to see on your bottom line as your net operating income. And that's the cash flow. Part of that cash flow can be used to, pay your investors, et cetera, et cetera.
Sure thing. Yeah, absolutely. It seems like, I guess the craze right now would be the single family homes, the multifamily.
I mean, housing's hot, man. And just in general, we're at record lows on housing inventory. We still have higher household formation than we actually have units going up. And that's been the case since 2011 or 10. It's somewhere in there. I mean, remember, so nobody remembers this because it's been a while, but in 2007, we had enough housing. Like we overbuilt it. And that's for sure. We absolutely built it. We're at high inventories. There's plenty of apartment units, blah, blah, blah. And then the 2008 crisis happened. And then that oversupply of housing, just fundamentally, plus a financing crisis, caused the absolute glut of housing issues. And that's why nobody built everything. Everybody got scared and they didn't build anything for like 3 years. And then 2011 came around and they're like, hey, maybe we should start building again. But it started real slow. We'll just put our toe into the water. And that's why prices started to go up, because demand was far outstripping supply. And it's still that way today. And, my forecast is probably going to another 5 years unless it gets really frenzied to build. So.
Yeah, no, absolutely. So, we kind of touched on, your background, what you're looking for. What are kind of your goals in the future? Maybe to someone who's listening, what are you specifically looking for?
Cody's our goals guy.
All right.
No, I think for us, just to, keep it short, is, obviously we want to continue to build our portfolio. Our focus is more solely on multifamily right now, quality multifamily assets, like John mentioned, just good affordable housing. We want to continue down that avenue. I think as our business continues to build, we're open to looking at other asset types and other asset classes in the commercial real estate space. But, we just want to build a large portfolio, and in doing so, we also want to be able to give back to our communities and to the people that we're serving and working with, and help add value to them in any way. That's
our goal is to provide investors a solid return on their investment, and simultaneously provide a safe, affordable housing or service to the community. Yeah. And actually, in fact, that comes first. Then investor gets return, right?
Yeah.
But that's really the goal. And it should be the goal of anybody that's in real estate to actually do the right thing. Yeah. If you don't hear that in somebody's talk, like they don't actually want to make their community better, like that's not okay. Yeah. You actually want to provide value in what you do, because you will be rewarded for it.
Sure. A lot of people are attracted to real estate because of the powerful wealth building strategies. But, like John's saying, if you're in it just for the money, you're in it for the wrong reason. Like, there's so much that you could do to give back to the communities and the people we serve through this avenue. And I think that needs to be your core focus first. So.
Sure. Absolutely. It's always important to kind of have that credo, I guess, right? Just, kind of those principles of, hey, I do want to make money, but also, serving the community as well.
Mm-hmm. Absolutely.
Yeah, definitely. Is there anything that you haven't said that you'd really just like to hammer home?
No, I mean, I think, listen, it's like anything else, it's a tough business. It's a very competitive business right now. If you're interested in real estate, I definitely encourage people to take your time, get educated, surround yourself with the right people that have an alignment of interest, get involved with successful people that are doing it, and learn from them, and, just continue to be patient and just absorb as much as you can. And like John referenced already, it's a long-term game. You're not going to get wealthy overnight in this.
There's no get rich quick schemes, guys.
There's not.
Drop it.
There's not. So you got to come in it with the long game, but I mean, it's very rewarding. So yeah, just be patient.
Positive mindset.
Yeah.
Must have perseverance, and then get around the right people. Those two things, because successful people have those mindsets. And they want to be around people that have those mindsets. Get around the people that are doing it, and just get involved however you can. Everybody has a value that they can bring: money, time, hustle, anything. I don't know. Maybe you're good at knitting and somebody wants a sweater. You're like, I'll trade you a sweater for an hour of consulting. I don't know. Everybody has a value to bring.
That's right. Absolutely. You know, I'm just curious as well, you know, where do you suggest, you know, if someone's starting out, where should they meet people to kind of network?
Well, Zoom, yeah.
We've met so many people on Zoom.
I mean, look, man, right now the age of networking is all digital. It's all online, right? And I think you can go and find 1,000 Facebook groups, different various meetup groups that are online that are doing virtual networking events. You know, it's a great place to start. Great way to expand your outreach. Depending on where you're at, what cities you're in. If you're down here in the South, things are open. You know, people are still getting out in some capacity. You know, you can find local meetup and RIA groups in your area, but you know, if anything, definitely start online right now for sure.
Yeah, and I would say this: don't do everything.
Mm-hmm.
Just focus on a few and be present there, and like people have to know you. So if you pop in and then don't show up like 6 weeks later and they don't know you, it doesn't help. So like kind of focus your efforts on a specific group, if you will, and be present.
Yeah,
Cool thing. Makes a lot of sense. You know, you know, maybe someone's watching that they want to get in touch with you guys. They're in the Houston market, they're in Tennessee, wherever. You know, where can we find you?
Yes, thank you. Check us out at www.blueoakinvest.com. Go to our website, check out some of our educational content. We've got a lot going on. We have our podcast, the Prosperity Through Multifamily Real Estate Investing podcast, where we talk about all things related to apartment syndication, whether you're an active or passive investor. And we also have a virtual meetup as well. We are the South Texas Multifamily and More Houston chapter. So you can go to our Facebook page.
Yeah, absolutely, John and Cody. You know, so for maybe someone who's watching right now, they're in the Tennessee market and they're in the Texas market, or they just want to collaborate with you. You know, where can we find you?
Well, you can check us out at our emails if you want to contact us at Cody or John at blueoakinvest.com. You can also visit our website, www.blueoakinvest.com, to check out more about who we are, what we have going on, some of our educational content and resources. Or if you just want to learn how you can partner with us, it's a great place to visit as well. Check out our podcast, Prosperity Through Multifamily Real Estate Investing podcast, where we talk about all things related to apartment syndication, whether you're an active or passive investor. And if you want to meet up and you love to network, check us out at our Facebook page, the South Texas Multifamily and More meetup group. We are the Houston chapter of the Multifamily and More brand. We host a monthly virtual meetup event, and here, hopefully this is in February this month, we'll be back in live in person as well. But if you love networking and meeting other industry professionals, definitely check us out there. So.
Yeah, absolutely. You know, well, Cody and John, it's been a real pleasure having both of you on. I've learned a bit, you know, about you, your backgrounds, markets you're servicing, deals you're looking for, and the future looks bright. Looking forward to it.
Thank you for having us. We appreciate it.
Absolutely. Talk to you later.
Thanks, Aaron.
Take care.